Hey everyone, in today's video, we're taking a look at the 10 factors that you need to consider when you're thinking about filing for Social Security. This is not an easy decision or one that you should take lightly, but after you've watched this video, you'll be much more informed about choosing the right age to file for Social Security. Stay tuned. Hey, I'm Devin Carroll, and this channel is all about simplifying Social Security so you can use the rules to your advantage. If you're new here, be sure to hit that subscribe button so you don't miss anything we publish. And hey, if you get value from what I'm saying here today, be sure to hit that like button as well. That helps us out with YouTube and lets them know that they should tell others about this video. Also, at the end of this video, I'm going to tell you where to download a free copy, the blueprint version of my book. You don't want to miss that. All right, let's jump in. So a lot of people who work in finance take a very hard stance on the best age to file for Social Security. More often than not, they'll say that it's best to delay your Social Security filing as long as you possibly can. But then on the other side of the individuals, like the hundreds of YouTube comments I've gotten, who say that you need to get it as soon as you can. Well, the truth is somewhere in the middle, probably, but neither of these are always correct. The decision about when to file is highly personal, and it has to be made considering multiple individual factors. Whatever you do, don't let the simplicity of the Social Security statement fool you. If you care about your retirement, this decision has to be made with careful thought and analysis. Now, my goal in this video is not to tell you that a certain age is best and another age is a stupid decision. I simply want to give you some things to think about as you are making this very important decision for yourself. So in the first part of this video, I'll give you some context, and then hopefully the second part where we talk about the individual factors will make some more sense. So this entire argument is centered around when you should file for your benefit. Should it be before your full retirement age and get a reduced benefit? Should you wait until your full retirement age and get a full benefit? Or should you file after your full retirement age and get an increased benefit? Now again, since I think this is easily the most important retirement decision you'll make, let's look at some other things that you should think about and lay some groundwork here just so you'll have the context for later. So first, let's look at full retirement ages since they're not the same for everyone. And then we'll take a quick look at how the reductions or increases work based around your full retirement age. So the first thing you have to know is that when you attain Social Security's full retirement age, you will get 100% of your benefit. But you need to know when that is. And thankfully, it's pretty simple. For those born between 1943 and 1954, it's age 66. For years of birth 1955 to 1959, you simply add 2 months for every year after 1954. And then for birth year 1960 and later, just use a full retirement age of 67. And this age is important because this is where you receive the full Social Security benefit. And during this video, I'm going to assume that you were born in 1960 or later and your full retirement age is 67. So how is your benefit adjusted based on filing ages? Well, if you file after your full retirement age, your benefit will be increased up to 124%, which is 8% per year, and that stops at age 70. If you file early, it's going to be reduced by about 6% per year. And just so this is really clear, let's put it in dollars. If your full retirement age benefit is $2,000, it will increase up to $2,480 at age 70. If you file before full retirement age, it can be reduced down to as little as $1,400, and I'm not including cost of living adjustments there. That's a $1,000 difference per month. So it's easy to see why the financial community likes to make these big, broad blanket statements suggesting that everyone should delay as long as possible. But despite the overwhelming software tools and online content that suggest just about everyone should wait, that's not what most people are doing. The filing data put out by the Social Security Administration shows that 1/3 are filing at the earliest age possible. So are most people making poor decisions? Well, I do think this decision is often made with a lack of thoughtful analysis, but broadly saying that filing early is wrong is short-sighted. One thing I know for sure is that there is a lack of resources to help individuals work through this important decision. So this leaves individuals to make the most intuitive choice in front of them, and that's generally centered around this concept of a break-even analysis. Now, these types of analysis, these charts that used to be out there, they tell you how long you'd have to live for benefit payments to catch up with other filing ages. And let me give you an example of how this works. Assuming again that an individual has a full retirement age benefit of $2,000, he or she would be entitled to $1,400 at age 62. If we go with the life expectancy assumptions from the Social Security Administration, which is around age 85 on average, we can see that filing at 62 would give you a total cumulative benefit of about $515,000 when you include a 2% annual cost of living adjustment. If you file at 67, your total benefit at this same life expectancy would be nearly $100,000 higher. But here's the catch. You have to live until 76 for those two filing ages to break even with each other. So if you died before 76, you would have been better off to file at 62. And some folks look at the life expectancy of their family members, co-workers, or friends and decide that there's no way they'll ever hit that break-even age, so they file early. Now, I do think that's a mistake. The question the break-even analysis answers is, what if I die early? And that's such a small part of the filing decision. It only considers your benefit amount and completely ignores the optimization of spousal and survivor benefits and the role your benefit amount could play in their lifetime benefits. So whether you're making this decision for yourself or helping someone else make theirs, there are 10 factors that you need to think about while you're doing this. All of these are very important, but the last two can have disastrous consequences if you ignore them. So let's go through each of these. So your decision about when to file for benefits begins with your gender. The decision to delay or not to delay is more important for women than it is for men, frankly. There are two reasons for this. Number one, women live longer than men. And two, on average, Social Security makes up a greater percentage of a woman's retirement income. So, the decision to file later and get a higher benefit is possibly more important for a woman to consider. If you're a man, it's likely that your benefit is going to be higher than your wife's benefit. Now, before I get stoned to death in the comment sections for such a comment, that is from data that the Social Security Administration puts out. And if that's the case, you need to exercise caution based on the impact your benefit will have to your wife, since she's likely going to outlive you and need the income worse than you do when you were both living. And I'll dig deeper into that in just a little bit. Then you need to consider your marital history. If you've had prior marriages, you need to figure out if you are eligible for benefits from any of those past marriages that could boost your own benefit. For example, if you have an eligible deceased spouse or ex-spouse, it could make sense to file for a survivor's benefit as early as age 60 and then switch to your own benefit later. It could be up until age 70. If you have an ex-spouse who is still living, you need to figure out, are you entitled to a higher benefit from the spousal provision from their work history? Now, I'm going to link up 3 videos in the comments that'll help you in figuring some of this out. The first is a video on Social Security and divorce. Then I'll have one on Social Security and survivor benefits, and then Social Security spousal benefits. So check all of those out for more information that'll help build the context around your marital history. So moving on, do you have minor or disabled children at home? If so, they could be eligible for benefits once you file for your own benefit. Grandchildren can be eligible as well if both biological parents are deceased or disabled, or if you have adopted them. There's a video on that. I'll link that up in the comments as well. This is one of the cases where it generally makes sense to file as early as possible. And that's simply because there's a rule that says before benefits can be paid to anyone off of your work history, you have to be receiving benefits. And when combined with your benefits, the benefits to your children, and maybe even an eligible spouse, can be up to 180% of your full retirement age benefit. So if you have children at home that meet the criteria, there's an obvious reason to consider filing early. And then we have disability. Look, if you're disabled, or if you even think you may meet the criteria for filing for Social Security disability, that at age 62 versus filing for retirement at age 62 could make a lot of sense. And this is because your disability payment is the same as your full retirement age benefit. Now, filing for disability will also enable your eligible beneficiaries to receive a benefit. So again, your children and your spouse. If you file for disability first and then file for retirement benefits, also know that the Social Security Administration will make up the difference to you if you're awarded disability benefits later. I've seen more than one individual who clearly met the criteria for disability benefits, but were waiting until their full retirement age for their retirement benefits to get to the full amount possible. And that was a bad mistake. The next is somewhat related, but different enough to have its own category, and it's your health. If you have a condition that could lead to a shortened life expectancy, that should be part of your decision process. If you're single, it may mean that you file for benefits as early as possible in order to get all of the payments you can. This is the one time that the break-even chart really makes sense. If you're married, you'll have to balance the impact of leaving your spouse a smaller benefit if you file early or a larger benefit if you file later. And this was part of the reason that I recommended to my own mom that she should file early. In a broad sense, the age, health, and individual benefit of your spouse also needs to be considered, and maybe even separately. But they are so interwoven that I'll cover them all at one time. First, let's assume your spouse is the lower earner. So if your spouse is younger than you, they're probably going to outlive you. If your spouse is also the lower earner, this means that your retirement benefit will likely become their survivor benefit when you die. And for that reason, it's important to consider how your filing timeline will affect the eventual survivor benefit that your remaining spouse is going to receive. In this case, delaying your benefit would increase the survivor benefit they'd receive for all of those extra years after you're gone. But if your spouse is in poor health and is unlikely to outlive you, delaying your benefits strictly for the purpose of increasing their survivor benefits just doesn't make a lot of sense. And like all of these scenarios, that one is highly dependent on the math and a lot of other factors. If your spouse is the lower earner, be aware that their benefit may not get to the maximum potential benefit until the spousal benefit portion kicks in. So if your spouse's benefit is less than 1/2 of yours, keep in mind that it could make sense to file just to open up your work record to pay a spousal benefit. For example, if your benefit is $2,000 and your spouse's benefit from their work is $400, they'd be entitled to the $400 first and then up to a $600 spousal benefit for a total of $1,000 at full retirement age. The catch is you have to file for your benefit first for that extra $600 to be paid. Furthermore, you have to remember that a spousal benefit does not increase beyond full retirement age. So if your lower earning spouse is older than you, by waiting to file, you may be increasing your benefit, but not necessarily the benefit of your lower earning spouse. And if you have a spouse with very little to no earnings, it could make sense to file early for the sole purpose of opening up the spousal benefit. A strategy like this, as all of them are, is highly dependent on multiple factors and the math and all of that. But when you compare the total amount of benefits you both could receive, this strategy could make more sense than you delaying your own benefit. Because again, that spousal benefit portion can't be paid until you file. And by delaying your benefit, you are also delaying your spouse's benefit. So for example, if your benefit at full retirement age is $2,000, your spouse would be entitled to a benefit at their full retirement age of $1,000. So if your spouse is 3 years older than you and you wait until you are 67 to file, you'd be waiting 5 years to get an extra $600 on your check. But meanwhile, you're leaving a $1,000 spousal benefit for every month you delay filing. So sure, your benefit would be higher once you file, but your spouse's benefit would not be. And the total benefit paid with you filing at 62 versus 67 would eventually catch up, but you'd be 84 when those benefits hit that break-even mark. If your spouse is the higher earner, their benefit will be more than yours. There's nothing you can do in your filing strategy to increase their current benefit or future survivor's benefit. At that point, you should consider your own life expectancy and the last couple of factors we'll discuss. But one exception to this may be if your spouse is the higher earner and in poor health, especially with a condition that has a high likelihood of ending in premature death. You may want to consider filing early because once your spouse dies, your own benefit is going to stop and you're going to start to collect your deceased spouse's benefit. So there would really be no benefit in having delayed your own benefit when you won't be receiving it, but for a very short period potentially. So for simplicity, let's combine the next two categories. If you have ample assets and other income sources, the relative importance of a filing decision is not the same as it is for someone with no other assets or income. You see this coming right out of the Social Security statistics. For Americans, the average Social Security benefit is 38% of retirement income. Now, that's a pretty high percentage, but this number includes those who have so much income, they probably don't even notice the Social Security deposits when they're put in their bank account. But it also includes those who depend on Social Security for 100% of their retirement income. So if you have assets, you're going to have more options in your filing decisions. And if you have income coming in, you're going to have more options as well. So that leads us right into the next consideration, which is your tax scenario. So somewhere between 0 and 85% of your Social Security benefits are going to be added to your taxable income. It could make sense to delay filing to reduce these taxes when you retire. It's not going to work for everyone, but for those in the right income bracket, it could make a big difference. So in order to determine how much of your benefit is taxable, you have to use this number called your combined income, which is a measurement of income that's used specifically for the purpose of determining how much of your Social Security should be included as taxable income. Now, your combined income is roughly calculated as total income from taxable sources plus your tax-free interest plus 1/2 of your Social Security benefits. So if you assume for a minute that you need $4,000 per month in income during retirement, your Social Security benefit at full retirement age, collectively, together, you and your spouse, is $2,000. This means that you'll need $2,000 from other sources such as retirement accounts. So what if you took the entire $4,000 you needed from your retirement accounts until you reach age 70? Now, again, it depends on your balance and a number of factors, but then you could switch on your Social Security benefit, which would be higher for delaying. In this case, if it was $2,000, it'd be $2,480. Now you only need $1,620 in monthly distributions from your retirement accounts. And since only half of your Social Security is counted in the provisional income or combined income calculation, the overall combined income is going to be reduced. And that results in less of your benefit being taxed and potentially less of your income total. Now, with all that being said, your tax advisor is the best resource for recommendations on a tax plan for retirement and Social Security. So be sure to touch base with them and talk through the specifics of your situation before you make a decision with filing based on tax benefits. And then finally, we have to consider your employment status. You know, the lure of eligibility at 62 is very strong. That's when you can start getting those checks. But if you plan to continue working, you need to be aware of the Social Security income limit. I've seen more than one individual who filed for benefits without being aware of this income limit and later got caught up with a nasty overpayment notice. The Social Security income limit is simply the amount of money you can earn before those earnings start to impact your Social Security payment. And if your income exceeds that income limit, then the Social Security Administration just says, okay, we're stopping your benefits payment. Now, that limit increases every year. For 2019, it is $17,640. And it's very important to note that that earnings limit only applies if you are under full retirement age. Once you hit full retirement age, there is no earnings limit in place. In this complex conversation on Social Security and choosing the right age to file for benefits, one thing stands out very clearly. There is no one-size-fits-all answer or rules of thumb for choosing when to file for Social Security. Not even this video considered all the factors that you have to in order to make a great decision, but I do hope that it gave you some great food for thought, and I'd encourage you to keep digging in and keep learning about how your filing strategy is going to impact your total retirement. You're absolutely making the right moves by watching videos like these, but don't take this as specific advice for your own situation. Keep doing your own research. talk to your own group of advisors, and most importantly, continue to stay curious and educate yourself. And if this video was useful, be sure to hit that like button. Again, that tells YouTube that we have useful content that everyone else needs to see. Also, the free ebook. You can just look for the word blueprint in the description and that'll take you right to it. You'll have it in your inbox within just a few seconds. Thank you for watching. Have a great day.